In this week's Beyond Bitcoin, we focus on all things Bitcoin, the proposed US BTC reserve, gold versus BTC, and Cathie Wood's $1 million BTC price tag. Looking more real now than ever before. Don't forget to subscribe, like, and share with like-minded crypto compatriots. See you then. Good morning and welcome to another episode of Beyond Bitcoin. My name is Derek Graham and here with me today is Greg Galton. And of course, you might remember Greg's got 25 years experience as an analyst, 5 years of which is in this space in digital assets and cryptocurrency. Hey Greg, how you doing?
Very well, thanks, Derek, and still learning.
Yeah, of course, we're always still learning, all of us. Oh, wow. Massive change. Trump is in, choke point 2.0 is finished. Gary Gensler will soon be fired. Goodbye and good riddance, Gary Gensler. The USA will create a BTC reserve, and which we'll talk about today. Hasn't the world changed in 14 days, Greg?
Unbelievable, Derek. Just the outlook for digital assets, for Bitcoin, for cryptocurrency, even for meme coins has just surged in the past 14 days. So we've set a new all-time high. We've broken through that 72.5, 73,000 level. We've left it well behind and we hit a high of almost 93,500 US dollars per Bitcoin and still holding above the $90,000 level. So it's been a fantastic 2-week period since Trump was elected and we had that red wave overtake Congress and Capitol Hill.
And so what that does, of course, is that whether you love him or hate him, for the crypto world, it actually means that these things, such as Choke Point 2.0, where Gary Gensler also was just literally dominating through his overreach, above and beyond any regulations that existed, where the US was getting pushed behind the realm of its great capability of being an inventor and a creator and entrepreneurs. That's not happening any longer. We can draw a line in the sand, move forward. So let's talk a little bit about the Bitcoin reserve and what that might do in the realm of Bitcoin's valuation, because so much in this space is driven by Bitcoin being the avant-garde, the first token, the primary token. Our view, of course, is that Bitcoin sits standalone, right, Greg?
Yeah, Bitcoin it's growing, it's evolving into its status as a store of value. It really has. I think over the last 13 or 14 odd years since Bitcoin's been around, it's obviously was highly speculative at the beginning. Everyone was talking about it in a digital gold, an inflation hedge, a defensive safe haven. It's now really evolving into what it is and what it should be going forward is the 21st century store of value. And
Yes.
it's evolving into those shoes as we speak now. And I think what's happening with the US will maybe fast track a lot of those positive tailwinds that we've been talking about for some time, much ahead of time. So it's going to be really interesting to see how that plays out.
Yeah. Audience, you're listening to two Bitcoin maxis here, so we're somewhat biased about where we're going to head here. But let's put this into context. Let's take you through a journey about what the giants are talking about with Bitcoin. What are the biggest investors in the world and some of the more avant-garde investors talking about Bitcoin's future? Maybe overlay it a bit with gold. And let's get this some context here. So firstly, Bitcoin at the moment is trading at $90,912 at the time of recording. That's about $1.8 trillion of capitalization. The very basic strategy that Trump announced would be the acquisition of 200,000 Bitcoin and building that as a foundation level. That creates some decent reserve into the US. But what we're taking a bit further here is Michael Saylor is turning around, of course, a real Bitcoin maxi with massive numbers of Bitcoin sitting under management of his MicroStrategy public listed company, is saying, look, if you looked at a strategic reserve of 1 million Bitcoins, what would that look like? That would be about 5% of Bitcoin total ownership or total released Bitcoins to date, about 5%. And what sort of impact might that be? He's suggesting over a 5-year period, that could be about $16 trillion of value, or about 45% of the debt of the USA. Then there's another level, which is what's called the Trump max scenario, where they purchase 4 million Bitcoin over the same period of time. And they talk about that as, having a yield potentially of $81 trillion in 4 years' time. These are mind-blowing numbers, Greg. Do you think they're possible?
Not in 4 years, no. I think Saylor's assumption is that Bitcoin gets to $3 million per Bitcoin by 2035, or is it 2045? I think it's 2035. So yeah, on that basis, yes, it does, because you're talking about an asset that at the moment only has a market capitalization, like you say, just below $2 trillion.
Yes.
So yeah, it's based on, and of course he's talking about buying it with free money. He's
Yes.
talking about buying it by printing dollars, not physically printing, but hitting a button on a keyboard and those dollars suddenly appear in the Fed Reserve's balance sheet, and then using those dollars to buy the Bitcoin on the market, and then simply just holding them for that period of time, for 10, 20, 30 odd years, at which point in time the Bitcoin price will have risen up to the point where it basically halves, that has a massive impact on the net debt within the US. There's several, what is it, hundreds of trillions of dollars of debt that the US has, and very high levels of net debt, to really have a significant impact on that. And he talks about precedents of, they've done it before with the purchase of Manhattan, Louisiana, California. There's been massive payoffs for doing this. There is a history of doing it, so why shouldn't they do it for what he's calling is the best asset of the 21st century in
Yes.
terms of Bitcoin as a store of value? And really talking about that shift from, if you wanted to keep your money safe in the 20th century, you put it into US treasuries. And if you want to keep
Hmm.
your money safe in the 21st century, he's saying you put it into Bitcoin. So he's talking about that transition from the 20th to the 21st century. It's visionary stuff. If he's wrong, it doesn't really cost the US anything. It's pennies on the dollar, cents on the dollar. And if he's right, he's basically halved the US's debt problem in the space of 30, 40, less than 30 years. Just ridiculous.
It's a very simple strategy, especially when you think, listeners, could you imagine if you had a key on your keyboard that you could push to create billions of dollars and then deploy it? And the interesting concept of this key that you currently create that in the US obviously creates liquidity and creates inflation. But in this particular case, it may not, because you can push that key and buy Bitcoin and hold it. It's not going into the economy and therefore causing an inflationary impact. So it's a bit of a no-brainer, really. Create money, buy Bitcoin. Then if you look at that, then if this does occur, and I think it's looking highly likely, especially with that scenario that we just covered, then look out there to see the nations that currently hold Bitcoin. And the USA is the biggest holder of Bitcoin at the moment. China is the second largest holder of Bitcoin, bless them, considering they don't like it. And third is the United Kingdom. Fourth, by the way, is Bhutan. And the difference between those is that China, the US, and the United Kingdom, all of those Bitcoins are seized. They've pinched them from proceeds of crime and kept them. Whereas Bhutan has turned around and said, we see a great future in Bitcoin, and they've purchased 12,206 of them, worth around 1.1 billion as of a certain date. Have to look at what date that is. We could do the calculation. Yeah, it's about 1.1 at 90,000. So you're seeing nations there that already hold Bitcoin. But if you've got the biggest nation in the world, biggest economy in the world holding Bitcoin, wouldn't you start thinking about putting that in your reserve? By the way, instead of gold. What do you think of that?
Yeah, it's a bold plan. It's one that I think Saylor's clearly got his head around the long-term value of Bitcoin. And I think, like you said, it's print money, or in Saylor's case, borrow money, buy
Yes.
Bitcoin, and then Bitcoin go up. That's what you're relying on. You're relying on the fact that a Bitcoin in 10, 15, 20 years time is not going to be at 100,000 US dollars per Bitcoin. It's going to be at $1 million or $2 million or $3 million. So it's a huge payoff for
Yes.
the amount of risk that you're taking, a very small amount of risk. So you don't get that sort of dynamic with gold. Gold is more of a safe haven play. And of course, you've had the issue with gold. Of course, the US currency at one stage, as many were linked to the gold standard. But of course, that became the limiting factor for central banks in trying to stimulate the economy, they couldn't issue more dollars than the gold
Yes.
they had in their vaults. So once they moved off the gold standard and created fiat, which is really and simply is just paper-based money, they talk about cryptocurrencies being magic internet money, yet it's magic paper money. It only has value because someone's willing to accept it in return for goods and services, and the government accepts it in payment of taxes. That's the main definition of a fiat currency. Bitcoin, I think, when you look at all the currencies around the world, both real hard currencies or fiat currencies and digital, Bitcoin is the only one that meets all the characteristics of a sound or hard currency. The supply is capped, 21 million. It's fungible, it's portable, it's all of those sort of good things that a currency needs to
Yes.
be. Yes, Bitcoin is not going to be used for P2P buying a coffee. Why would you use your Bitcoin to buy a coffee? Then in a few years' time, that Bitcoin could be worth a lot of money. I.e., the guy that bought two pizzas with 10,000 Bitcoin. That Bitcoin now is worth a horrendously large amount of money.
Mm.
He did it to start the process to prove that Bitcoin could work. And he was mining plenty of Bitcoin anyhow, so that's fine. He's not a pauper living on the streets. It's, as I said, Bitcoin meets all of those characteristics of a solid, of a hard currency. So why wouldn't you invest in it as a nation state,
Yes.
especially when you have big issues with debt and the only way to fix it is either to tax your population. That's when it's extremely unpopular. The other option is to print more money. That's inflationary. And look at the impact that inflation's having on our lives today. So that there really is no clear way out other than doing this. I think it just makes perfect sense. But it is a new and novel approach to macroeconomic theory, and one that perhaps some of the boomers may have some issues getting their heads around. We'll see how it pans out.
Let's talk about boomers for a moment. So, gold, which the crypto world affectionately refers to as boomer rocks, gold, its performance over the last 4 years is interesting to watch because I know of people that hold decent amounts of gold as their reserve, and they're very proud of their performance. So, let's just have a look at that for a moment. So, if you take this date, the 19th of November, it happens to be the recording date, in 2020, roll it through to exactly today's date, it's a year. Gold back then was worth 1,861 US dollars an ounce. Today, it's worth $2,590 an ounce. So that's a return of 39% in 4 years. It's not very good.
Is
Yeah,
that per annum?
yeah, 39% over that period of time. No, 39% gross in 4 years. That is not per annum. That's over 4 years.
Okay.
And so during that period of time, on the 19th of November in 2020, Bitcoin's price was $17,700. Now it's $90,877 live again right now. That's an increase of 413% over the same period of time. Yet the boomers are still
A bit
absolutely convinced that you'd want to be able to have a gold reserve and Bitcoin is of no value. I guess that's a generational thing. There needs to be knowledge, education. They need to understand the factors that influence the price of Bitcoin versus gold. And I think it's getting to a point now where people are starting to realize that gold took 5,000 years to be worth 17.5 trillion dollars. Whereas Bitcoin is now worth 1.8 trillion, and it's done it in, what is it now, about 15 years.
15 years, yeah.
Yeah.
Yeah,
And
block was mine, 9th January 2009.
there you go. And what you're seeing here is this typical adoption of technology curves. For those investing and holding Bitcoin, let's have another look at this, what that might mean price-wise, okay? Firstly, as a really simple calculation, if Bitcoin was to become the same capitalization that gold currently is, then one Bitcoin would need to be worth 887,917 US dollars just to be the same as gold. And most people in this industry talk about exceeding that over a period of time. They talk about the flippening. By the way, Greg, already Bitcoin has flipped the capitalization of silver. It did it about a week ago.
Okay, I wasn't aware of that. I don't track the boomer rocks, so there you go.
So let's have a look at another way of valuing Bitcoin, and that is ARK Investments. Kathy Woods, of course, has been consistently analyzing Bitcoin, what it would take, and reanalyzing what it would take for Bitcoin to reach a certain price by a certain date. Her date, by the way, is 2030, which of course is 5 years away. And she has a base case of 600,000 US dollars by 2030. Probably a number that would have been unforeseen, unbelievable rather, back, 12 or 18 months ago when Bitcoin was $17,000. Now, when it's sitting at 90 and heading towards 100 at a solid rate, people are starting to go, but here we go. She turns around and she says that a 600,000 Bitcoin would see moderate institutional investment in Bitcoin, with institutions allocating a very small portfolio very small part of their portfolio in crypto assets. The drivers to make that happen are that they're going to look at Bitcoin as a sort of a hedge against inflation and just a small percentage of their overall holdings. She's got a base case of 1.5 million, Greg, by 2030. And that is making an assumption that suggests there's more aggressive adoption with institutional investors. And then she's starting to see exchange traded funds, which of course are already there, broader acceptance around the world, and then sovereign nations starting to invest $1.5 million. And then she's got what she calls an extended bull case of $3.8 million per token. Wow, it's extraordinary. And that would suggest that significant shift in institutional behavior, with institutions holding 5% of their portfolios in Bitcoin. That's a lot. But nonetheless, 5% of their portfolios in Bitcoin, and seeing this appetite grow right across the sovereign investors, sovereign nations, etc., investing in it, and also, of course, the corporate cash treasury reserves investing in it. This was predicted 6 months ago. And what she doesn't have in here is, of course, Trump coming in and creating a reserve, Greg. So these numbers are extraordinary, and they're not even discussing the potential of a Bitcoin battle in the reserves. Is she totally out of the tree, or can you see a path to that?
I think Kathy Woods had a history of getting it wrong on so many things. Eventually, she has to get it right, and hopefully, it's on Bitcoin that she gets it right. I question some of those numbers in terms of their impact on the Bitcoin price. I'm still very bullish on the outcome for the Bitcoin price over the medium to longer term. Just not sure I'm going to stand by her numbers. But what we talked about in the introduction is that Trump's election, or is it re-election? I don't know how you're phrasing it, and this red wave that we're seeing coming through has fundamentally changed the outlook for crypto assets, digital assets over the coming period. So you've had Larry Fink, they had a BlackRock recently in an earnings call saying that they are suggesting to each of the companies listed in the US that they look to start adding Bitcoin as a part of their strategic reserves. So that's the corporate side. There's someone pushing that on the corporate side. Obviously now have nation states that are looking at doing this. Trump's move, I think, supercharges that transition to statehood, to states doing this. They have the Bitcoin that they seize from Mt. Gox, but actively buying Bitcoin in the market. Only El Salvador's been doing that, and that's been extracting the wrath of the IMF and the World Bank for doing that. But it'll be interesting to see what Trump's impact on that is. It's going to be very significant, I think, going forward. And then they have institutions taking an approach within their alternatives bucket, and rather than looking at gold anymore, they probably should be looking at digital gold in the form of Bitcoin. So I think all these things are very realistic. It's just ultimately what the price ends up trading at and when. And look, we can talk about the global liquidity cycle and all of that, and I think that'll probably be a separate podcast that we do about where the Bitcoin price can head over time. But yeah, I think all of these are basically creating significant tailwinds to the Bitcoin price. Yes, it's moved up 20 odd thousand US dollars in the last 14 days. There's good reason for that. It may well pull back in the short term, but we certainly see it going significantly higher from here because of all those tailwinds and the impact that buying will have. And remember, 94% of all the Bitcoin in the world has already been mined.
Yes.
3 or 4 million of Bitcoin has been lost.
Yes.
Right. So that there's not that much Bitcoin in the world. So If people start buying it and the US really get behind this strategy of wanting, as Saylor calls it, to own the 21st century, then it will be a pretty significant driver for the Bitcoin price going forward. So it's all stacking up. It's quite hard to contain the excitement for what might happen to the Bitcoin price over the coming 5 years. But it's certainly, I'm not saying it's going to be up only. There are always significant pullbacks that we tend to see, but those tailwinds are certainly blowing very strong. And Bitcoin's heading for the moon, as the DGens like to say.
Yeah. Well, of course, volatility is a feature, not a bug, as we always say with Bitcoin. And one of our funds trades Bitcoin and generates Bitcoin. So therefore, we want volatility. Sorry about those that just want to put it in the bank and hope it's not too volatile. But as a investor, I've got to say, when I look going forward in Australia, we are constantly bombarded with saying the best investment is real estate, and real estate going up, what, 30%, let's say, over the last 5 or 6 years. It's not. Bitcoin's far better. And then we also hear the Australian dollar is a solid currency. I wish it was. Then cost of sports cars that I love so much
I'm not sure
would not be
either.
as expensive. So clearly the Australian dollar keeps going down. And one has to remind ourselves that fiat is a Latin term, and it means let it be done or it shall be done. In other words, have faith. There's nothing backing it. Have faith. So when I look going forward, I look at it, and certainly as a Bitcoin maxi, most of the money invested is in Bitcoin with some altcoins. And I look at saying the alternative is gold, the alternative is fiat currency and get a return in the bank or something better, or is it real estate? Bitcoin has so thoroughly outperformed all of those. And now with Trump arriving in, it's very unlikely it's going to race down to $20,000 again, despite our love of volatility. So, much to discuss. We're excited about the future, as you can tell. Next week, we're going to be talking about the 4 seasons, the seasons that this crypto world goes through on a fairly regular basis and has done since 2012. But until then, Greg, let's watch Bitcoin's progress and continue to trade it.
Sounds good, Derek. Thank you. See you.
Bye for now.